I'm going to look at what's been happening in terms of investment, then drill down to the fundamentals, what's happening with demand and supply, and take a look at how that might develop in future. So first of all, on the investment side, I want to emphasize that when we look at where the investors in student housing are coming from, we can see it's very definitely a global market. There are distinct jurisdictions, including Asia and Russia, Australia, where investors are active, and they're looking for global product all over. But of course, it's still a small market. This is the global volume of deals done, paling still into a very small number compared to, say, offices. But the important thing about the sector is that it's very dynamic. It may be small, but it's growing. And we've seen over recent years a significant increase in global activity into the sector. The US is the most mature market, and you can see with the usual cyclical challenges of 2009, it has been consistently invested in. But last year, 2015, was really the year that UK student housing came of age. A lot of US funds started buying. So last year, the UK market was actually bigger than the US market. But it's highly symptomatic of how a small, formerly niche, sort of fringe investment, maybe just 15 years ago would have been very marginal, actually has become a major global asset. And you can see this reflected in the performance that we've seen in US REITs. You can see here that before the Brexit wobble, the UK was outperforming last year, so a very good reason for people to be piling into the sector. It's now the US that's once again outperforming. And when it comes to where the money goes to, we can see that there are many more limited markets globally that are considered investable at the moment. So the focus is very much on North America. It has been, of course, as I just said, last year it was very much on the UK, and of course there's a market in Australia. But this really begs the question, can other countries, and particularly European countries, see the same sort of maturing and investment in student housing in, say, 20 years' time? But will the rest of Europe start seeing a higher level of investment? Well, we can see that in the last 6 quarters, there has been more focus. We can see in the light blue there, in the last 6 quarters, there has been some focus on Europe. And we think this is the next phase, if you like, in the story of global student housing. So 6.5 billion invested in last year and 3.9 so far this year. So this year looks like, if it continues, being a bigger year than last. If we have a look at who is investing from the point of view of institutional funds and so forth, we can see that the vast majority of these funds are focused were last year focused on the UK compared with the US. I think there was a feeling that there were opportunities here, relatively few in Europe. So the multicolours here are Europe. Now, just to confuse you all and keep you on your toes, so yes, 11% of all the institutional funds went into Europe. To keep you on your toes, I've changed the colours here. Once again, this is the UK. But when it comes to private investment, we're seeing virtually nothing into the US. And instead, nearly a quarter is in Europe. So it seems to be a feature of new markets, nascent markets, if you like, that the private sector get in there before the institutions start investing. So they establish and demonstrate, if you like, what the investment's like. That's certainly what we saw in the UK. And then we would expect the institutional investors, the pension funds, insurance companies, to come a bit later. This is just to prove that we're not complete boffins in the research department. We do know some of the deals that are going on. I'm sure Marcus can chat to you a bit more about those in the panel session. What we are interested in, of course, very much at the global level, investment level at the moment, is the story of yield compression. It's something we're all living with. Central bankers really have changed the global investing environment. But what we see here is this blue line shows initial yields, big deals done in student housing. And you can see that there the yield compression has been much more pronounced. It's changed, if you like, from something that's perceived as fringe and high risk into something much more akin to multifamily housing, with yields at those sorts of levels now. So there certainly is, as the sector matures, scope for capital growth and for yield compression. And of course, we've just seen that this can be coupled with very strong rental income story. So the fundamentals for total returns really are looking quite exciting. This I won't go. This is in your reports. Do have a look at it, but just goes into more detail on those yields. The story for student housing is very much about net operating income and long-term income streams, which we think will suit the investing environment and should be of particular interest to institutions in future. So what will those investors be faced with? What does the sector actually look like and the future of the sector look like? I'm going to take you through some of the findings on demand. First of all, the number of students. It's not surprising the US is the dominant market here. It has a vast number of higher education students. But what I want to show you today is the potential in Europe. We're looking here at about 11 million plus enrolments throughout Europe. The biggest being in Germany, followed by France and the UK. So there is a market. What's really interesting about the European market is that it divides into two. There are those students who can't wait to get away from mum and dad and will take any accommodation they can. And then there's the Latin countries, Italy and Spain, where they all seem to stay with mama. So what we've got here is 75% of Italian students living at home. Very, very tiny student accommodation market. And at the top there, 23% living in other types of accommodation. The independent sort of Scandinavians at the other end, the Swedes and Danish, wouldn't dream of living with mum and dad. But if we look, for example, at the Danes, they find only 11% can actually be accommodated in student accommodation. The rest are in sort of private rented sector or other types of accommodation. So what this shows is actually how woefully small the provision of student accommodation is throughout Europe, regardless of what alternatives are found. The biggest provisions in the Netherlands at 29% of students, followed by Sweden at 28%. So if you can capture just a small amount of those people either living at home with mum and dad, or probably more realistically those who are currently in other types of accommodation, you've really got potential for a lot of growth in Europe. When we look at the costs and what people might be prepared to pay, you can see there's a big difference between the survey here we did of what students will be paying in terms of tuition fees, how that will compare to their living costs and their accommodation costs. And you can see, and I really want to keep stating this, there are many, many different markets, and it's difficult even to talk about a single country. These vary from institution to institution and city to city. So the basic story here is that it's incredibly expensive to send your child to university in North America, particularly if you're an international student, so if you're sending them from overseas. The cheaper, it's generally cheaper in terms of tuition fees and accommodation costs and various other things for domestic students. But really, what this shows is that accommodation costs, the international students will pay more on accommodation. And sometimes that pales into insignificance next to the sort of tuition fees that they'll be paying. So generally speaking, we find the strongest markets for student accommodation are from international students. And therefore, the capability of an institution to attract high fee-paying international students is a good indication of how strong the student accommodation market might be. Here's an example of the different costs, and it's worth really thinking about individual institutions, individual cities when thinking about the pricing points. And possibly not surprising that Berlin can support those rent rises we've just seen, given that the other costs are much lower. Overall, if we look at the main markets in Europe, we can see that the trend, the demand trend is upwards. So enrolment, student enrolment, certainly in post-GFC grew quite significantly as people sought to upskill, as it were, over the recession. The growth has continued, but at a slightly lower rate. But we're looking at increasing numbers. But once again, I urge you to look at individual jurisdictions, because there are some which are growing very fast. Again, largely in Europe. Australia's there as well. That's a very interesting market, but maybe not one to talk about so much in Munich. But do bear in mind that there are other jurisdictions where student enrolment seems to have plateaued. So you're going to be investing into differing markets with differing rates of growth. And then there's a further complication, and this is why you need to look at individual institutions. You find that the rate of enrolment, particularly by international students, has continued to grow in the top scoring universities. So this is out of the 900 or so global universities, but it's falling in the poorer quality ones. So you've got some distinct differences city to city and institution to institution. And then this just shows that the more ranked institutions you have, the more likely you are to have overseas students. So you can see that the US and the UK in particular, with their large number of high-ranked universities, attract those lucrative international students. It is worth noting that, of course, international students globally are attracted by English taught courses. And the number of these English taught courses are increasing. So you can see the Netherlands in particular leads here. We think that these institutions are much more likely to be attracting the global students. So once again, big differences between different institutions and things to look out for when investing. In future, you could also be looking at a whole new sort of raft of different nationalities as customers. These are the nationalities that come in quantity to different international universities. We can see that when it comes to demographic forecasts, we would expect South Korea and in particular China, that have been feeding this market a lot, to actually see some decline, whereas the Middle Eastern countries, Saudi Arabia and African countries like Nigeria are going to increase. And of course, these countries have different preferences according to the universities they want to go to. So there's a lot of complex trends at work here when looking at the sector, and I think a lot of opportunity that can result. A mixture, if you like, of both demand and supply. On the supply side, I've already alluded to the fact that there isn't a great deal. Again, this is in the report, so do study it at your leisure. But you can see that when it comes to the national provision rates and the number of beds per enrolled student, Australia and Spain, for example, only have 6% provision. The UK, because of the investment that's happened in the sector, is up further at 24%. But I think we can all see that this leaves a lot of scope for further expansion. If we think about how that expansion is going to happen, I think there's three main trends I want to leave you with about how that's going. One of the things that I guess any parent of a student will appreciate is that there's starting to be a dichotomy between the provision of amenity, and in the most mature sector in North America, you see a huge number and quality of amenities being provided to try and attract and compete for the most lucrative students. But those students, even if they're wealthy and coming from overseas, are increasingly wanting to study. And so study space is starting to compete with amenity space. So it's really a case of knowing your market, understanding what the requirements of the student population are when making provision. The second trend is one that results from this increase in number of students, very low provision of space, but also the fact that when it comes to domestic students, you're competing with low-cost accommodation in the market generally, and that means there's an increasing gap for budget space, if you like, mainly for domestic students. It's not all about luxury space for wealthy Chinese and Middle Eastern students. And finally, there's a real emphasis on management platforms. This is an area where the digital revolution will have a big impact. But actually, the ability of management to extract the maximum revenue from the accommodation will have a big bearing on performance, especially for investors who are looking for long-term income streams. The quality of management, the ability to diversify, for example, into student hotels or even hotels generally, using the same accommodation, really maximizing its usage over the year will be key. And I think the technological age will assist in that. So I've whizzed through as quickly as I can. Hopefully we've got time for some discussion now. Thank you.